Hello and a very warm welcome to the brand new edition of Buy Now, Sell Now Weekend. I'm Kamya Verma. But there's lots lined up on the show. We'll be discussing JK Tyres as well as L&T, both these stocks, and we'll also be discussing Sarthi Kumar's portfolio on the show on our special segment called the Portfolio Advisor segment. Let's bring on board our guest who will be addressing all those queries. Avinash Gorakshakar, the CIO and Head Research at Precision Investments, as well as Amit Harchekar, Chief Technical Analyst at Aplus Analytics.com. Gentlemen, a very warm welcome to Buy Now, Sell Now Weekend. Let's first get in a query from Mahesh Patil. He has a question on JK Tyres. Let's listen in.
My question is on JK Tyres. I hold 500 shares of JK Tyres at a buy price of 48. My time horizon is 2 to 3 years. Should I keep holding this stock or move to some other stock?
Okay, so Mahesh, Mr. Patil rather clearly has a time horizon of about 2 to 3 years. Now talk about JK Tyre's fundamentals and the acquisitions. They have in fact finalized plans for mega expansion in Chennai. They do plan to revolve around 3,000 crore investment promise, and they have received a nod to buy Birla Tyres for 2,195 crore rupees. They would also be acquiring Kesoram arm Cavendish and have received the CCI nod to buy the same. Avinash, first up, would like to get in your thoughts and purely what is it that you like about JK Tyres, just going by the fundamentals of the company. What is your thought? JK Tyres, is that a good buy?
No, I think already, the investor is making good amount of money at the current level, and my sense is looking at the kind of acquisitions which JK Tyres has already done for Birla Tyres and the kind of expansion they are putting up in Chennai. Clearly, I think both volume expansion as well as market share expansion is going to happen quite rapidly over the next 18 to 24 months. I think considering the horizon of at least 2 years which the investor has got, my sense is possibly this stock price could easily give him a 60-70% upside. He needs to hold on, and I think most importantly on the input side, raw material prices, especially rubber prices, have been soft for a long time, so they would obviously help the company sustain the EBITDA margins for a good amount of time. And considering the kind of revival in the passenger and the truck segments where JK Tyres is a very large player, I would presume that he should hold on, and I think probably over the next 2 years he should possibly see his investments actually easily moving up by about 60-70%.
Okay, that's a recommendation coming in on the fundamental side, and with the 2 to 3 years of time horizon, the stock can appreciate as much as 60 to 70% is what Avinash's view is on JK Tyres. But let's get in a view from Amit as well. And Amit, what is it that you make out as far as the charts are concerned of JK Tyres? This week the stock lost about 2 or 3 odd percent. What are the key levels that you would be mapping out for as far as JK Tyres is concerned?
Well, 1 year of price action clearly suggests that the stock was consolidating into a bearish triangle, and since we have had a breakdown below 95, all bullish possibilities have got negated. Now every pullback towards 90 to 95 will be met with good amount of supply, and that's why we believe the stock is likely to consolidate for another 6 to 8 months. So technically we are expecting the stock to move lower, around 58 to 59 would be good level from again where we can expect a long-term buying to occur. So in the short term, I would be quite cautious on this counter. So what I would just suggest is to exit this counter at current levels and try to enter around 58 to 60, which again turns out to be long-term support. Trend is very weak because a lot of long positions have got stuck around 95 to 100, and they will be start looking to unwinding at higher levels. So it's a clear sell, but around below 60 it becomes a good buy.
Okay, so going by the technicals, Amit clearly has a sell call on this one. So a contrarian view coming in. On the technical side, Amit is of the view that the trend looks extremely weak and the stock is, maybe one should exit out of the stock at this point and maybe consider re-entering below the 60 levels. Well, that's the call coming in. However, Avinash is quite bullish given the fundamentals of the company. But get in a check on L&T as well, and we believe, Mahesh, you have another question on L&T. Tell us, what is it?
My question is on L&T. I hold 30 stocks of L&T at a buy price of 1350. I am a long-term investor. I like to hold this for 2 to 3 years. Whether it is advisable to keep holding or book profits.
Okay, that's a question coming in on L&T, and in fact, in the budget, a lot of announcements were made to boost the infra sector, which seems to be positive for L&T. And just talking about the company specific, they have completed the sale of casting manufacturing unit to Bradken, and they have sold it at a price of 163 crore rupees. The L&T construction, that unit has won orders worth 2,213 crore rupees, and with the focus on infra from the government side, seems to be positive for L&T. Avinash, like to get in your thoughts on L&T just by the fundamentals. Do you think the company in the long run is likely to perform better and should be reflecting on the stock price as well?
I think from a longer term perspective, L&T has got a very strong business model, not only from the infrastructure space, they have a very large presence even in the defense space. My sense is, I think not only has the budget increased the allocation for infrastructure, but hopefully after maybe one more quarter, the year FY17 should be a reasonably good year for L&T, and hopefully once the government spending on infrastructure projects starts, and more importantly, capex from the private sector also begins, you would be seeing definitely some sort of earnings recovery happening on the L&T kind of financials. From a 12 to 18 month horizon, you could expect a price of around 1600 rupees.
Okay, in the next 12 to 18 months, expect that price and do monitor those levels that Avinash is talking about. You could hold on to your investment there. But let's get in a check what Amit has to say about L&T. And Amit, given the charts over the last, or rather year to date, just in January alone, the stock has lost about 8% odd. But 1 month, the stock has done exceedingly well and gained about good 5% odd in the last 1 month. Would you expect the rally to continue for L&T? What are the chart patterns indicating to you?
Well, it's too early to call a bottom at this point of time, but when you see a 10-year price action or 20-year price action, major support zone for this stock comes between 1050 to 1100. So from a trading perspective, the best strategy would be add your long positions at these levels. The 200-day exponential moving average is trading at around 1350 to 1400. So you cannot expect a rally beyond that levels. But from these levels, since it has been trading into an extremely oversold terrain on monthly charts, we can expect a pullback towards 1350, but it could take almost 6 to 8 months. It may not happen quickly or in a matter of weeks or months. So right strategy would be add your long positions at around 1100 and play for a target of 1350. That would be a good strategy for taking profits at higher levels.
Target price is 1350. So both our experts believe that you could hold on to L&T. The stock has a lot of potential there. Let's slip into a short break at this point of time, but on the other side, we'll be discussing Sarathy Kumar's portfolio on our Portfolio Advisors segment. Stay tuned for that. Welcome back. You're watching Buy Now, Sell Now Weekend with me, Kamya Verma. Today on our Portfolio Advisor segment, we'll be addressing Sarathy Kumar's portfolio. Let's quickly run you through his profile. Well, he's 29 years old, a scientist by profession, has a time horizon of about 6 to 12 months. Let's take you through the stocks that he holds in his portfolio. Remember, he has about 1,000 shares of Ashok Leyland, which he bought at a price of 89.9 rupees. He also has about 100 shares of Century Ply, which he bought at a price of 180 rupees. He also holds about 1,070 shares of Morpen Labs, which he bought at a price of 37.2. He holds about 100 stocks of Lloyd Electrical and Engineering, and which he bought at a price of 293 rupees. From the large cap space, he has about 10 shares of L&T, which he bought at a price of 12.30. Dr. Reddy's is his pick from the pharma space, which he bought at a price of about 3,093. Getting a check on some of the other pharma stocks that he has in his portfolio. 250 shares of Marksans Pharma, which he bought at a price of 106. GMR Infra also features on his list, which he bought about 500 of those at a price of 16.2 rupees. And finally, 20 shares of Alcargo as well, which he bought at a price of 205. Avinash Gorakshakar is with us to tell his overall view on Sarathy Kumar's portfolio there. And Avinash, fairly a mix of good mid-cap and large-cap stocks. What's your overall sense? Has he gone right or wrong in his stock picking?
I think more or less, the stock selection has been good, but I think the prices at which the investor has purchased is slightly on the higher side. My sense is I think he needs to give it a little more time. The time horizon I think has to be at least over the next 12 to 15 months, where possibly he could get a good upside, considering the kind of composition of the portfolio.
Okay, so fairly a mix, but the buying price could have been better. Let's address individual stocks then, Avinash, and let's talk about the first three stocks. Ashok Leyland, which he bought at a price of 89.9, doing pretty well at this point of time. Century Ply, which he bought at 180, is seeing a bit of a downside and has gone below his buying price. Take a look at Morphin Labs as well. What's your call on these three stocks?
No, I think as far as Ashok Leyland is concerned, I think he should hold on. I think the company has posted very strong numbers for the last couple of quarters, and I think going forward, even FY17 should turn out to be better. Our sense is that in Ashok Leyland, he could get a price of roughly about 110 over the next 6 to 12 months. As far as Century Ply is concerned, also, although the price of his acquisition is slightly on the higher side, this is definitely a very attractive play in the mid cap basket, and my sense is over the next 12-15 months, he could get a target price of around 200. And as far as Moripon Laboratories is concerned, I think this is a new mid cap stock which has actually returned to the black and started recording profits after a very long time. Our sense is that one could look at a target price of 50, provided the investor holds for the next 12 to 15 months.
Okay, so Sarthikumar, there you have it, a buy call coming in on all first three stocks. You could hold on to your investment, and in fact, Avinash has pointed out some interesting target points that you could be monitoring on each of those stocks. Take a look at the next three stocks that he has in his portfolio then, Avinash. It's Lloyd Electric and Engineering. What's your call on this one, given that he bought at a price of 293? The current market price stands at 211, so clearly he's making a loss there. L&T is his second pick, which he bought at around 1230. The stock currently is trading at around 1185. And finally, from the pharma space, it's Dr. Reddy's, which is doing fairly better than his buying price. What's your call?
No, I think as far as Lloyd's Electric is concerned, my sense is I think he should use the opportunity to buy a little more and average his buying price. More importantly, clearly looking at the kind of consumer spend opportunity following the 7th pay commission, our sense is that this stock could definitely perform very well over the next 12 to 15 months. Here he could possibly get a price of 280 or 290, but he has to give in some more time and he needs to average. As far as Larsen & Toubro is concerned, I think L&T definitely seems to be a very good opportunity if you are looking at a slightly longer term scenario of the next 15 to 18 months. Our sense is that L&T could possibly give him a price of 1500, but clearly patience has to be the watchword here. And as far as Dr. Reddy is concerned, I think he's already in the profits to some extent. I think looking at the kind of performance for FY17, I think third quarter for Dr. Reddy was remarkably very good. So probably a price target of 3400 looks here.
Okay, that's a call coming in, and clearly a whole call coming in on all the other three stocks also that you have in your portfolio for Lloyd Electric. Well, the fundamentals look good. Give it a more time and you could see the target of about 280 for Lloyd. L&T as well, hold on to this one. Patience is the key. 1500 is the target price that Avinash is setting out. And finally, Dr. Reddy's. You could hold on to that as well. The third quarter results were spectacular and expect a rub-off effect in quarters to come. And on the back of that, 3400 is the target price set out by Avinash. Let's discuss the other three stocks that he has in his portfolio. That comes in the name of Marksans Pharma, which he bought at a price of 106, and the stock has actually seen a 50% or rather a 50% drop in the price. It's also GMR Infra that he has in his portfolio. 16.2 was his buying price, and finally All Cargo, bought at a price of 205. What is it that you would like to recommend on all these stocks?
I think, Kamya, as far as Marksans Pharma is concerned, I would suggest him an exit because not only has the stock underperformed quite significantly, but I think I would suggest him a switch in the pharma space, a buy for say Indoco Remedies, which is also into the pharma space, a good mid-cap growing company. And here we believe that he could get a target price of around 350 over the next 12 to 15 months. As far as GMR Infra is concerned, again, looking at the kind of debt restructuring and the kind of balance sheet cleanup, if he gives in a time horizon of at least next 12 to 18 months, he could get a price of around 19 to 20. And finally, all cargo is trading X bonus. The company had given a 1:1 bonus issue. So here also, I think looking at the logistics space and the kind of expectations that we will probably see the GST bill by June, July this year, he can hold on here. He should get a price of around 225, 230. But again, from a medium term horizon.
All right, that's a call coming in. So clearly, Marksans Pharma, that's the one where you need to exit from and instead put that money into Indoco Remedies, and you could expect a target price of about 350. The stock can go as high as that one and is a better pick than Marksans Pharma. GMR Infra as well as All Cargo, you could hold on to those investments. Let's quickly run you through Avinash's recommendation then. And first up, Ashok Leyland. Good call there. You could hold on and watch out for a target price of 110. Century Ply is your second pick, which you could hold on to and watch out for a target of 200. Morphin Labs is also a good call. 50 is the target price that Avinash is setting out for. The other three stocks that you have in your portfolio, that is Lloyd Electric and Engineering, hold on to that one. The stock can go as high as 280. L&T, patience is the key, and the stock would go as high as 1500. For Dr. Reddy's, the target price that Avinash is monitoring would be 3,400, so hold on to this investment as well. A complete no-no when it comes to Marksans Pharma. Exit out of that one and instead put your money into Indoco Remedies and watch out for a target price of 350. GMR Infra can go as high as 19, so hold on to your call there. All Cargo, finally, hold on to your investment for this one as well. 230 is the target price that Avinash recommends. Just to remind our viewers as well as Sarthi Kumar that this portfolio recommended here is a model portfolio. Please do consult your individual investment advisor before taking any positions in the stocks. Let's then slip into a short break at this point of time. On the other side, we get you some recommendations going for the week ahead. Welcome back. You're watching Buy Now, Sell Now Weekend. Take a look at the markets, and it's been a good week, so to say, and the post-budget rally. We saw that continuing with a few dips there. Nifty, in fact, gained 0.3%, and Sensex has also gained about 0.3%. Let's get a view then from our analyst, Avinash, as well as Amit are here with us. And Avinash, first to you. Given the way we saw Nifty moving in the last 1 week, 0.3% higher, but a lot of volatility and up and down is what we saw for the Nifty. What's your sense and what's in store in the coming week as per you?
I think the markets are definitely showing pretty good amount of support at around 7,500 odd levels, and my sense is I think 7,550 to 7,600 will be a key area where the markets could possibly consolidate for some time. More importantly, I think we probably would be having now IIP data as well as the inflation data coming out, and I think over the next couple of weeks, I think the market is keenly awaiting what happens in the forthcoming credit policy. I think if the rate cut does happen, and if it is a 50 basis point cut, you could see the markets getting further getting re-rated. My sense is I think this is a good opportunity to buy on declines, and any decline in the markets should be used by the investors to actually build up their portfolios.
Find out which stocks would you like to recommend to our viewers.
Kamyab, I'll be recommending two stocks. The first stock is Capital First. We believe that from a medium-term horizon, this is a company which operates in the SME and the MSME segment. Company has been showing very strong numbers, especially in the last couple of quarters, and we believe that FY16 will be another strong year for the company. As far as the asset quality is concerned and the retail mix is concerned, our sense is that the loan book growth is going to be pretty strong, around 70 to 80%. More importantly, with the kind of 7th pay commission money flowing into the hands of government employees, we believe that the segments in which the company operates, especially consumer durable financing, two-wheeler financing, and more importantly, the MSME segment, we could see both these segments growing significantly over the next 12 to 18 months. And in fact, on valuation terms also, the stock appears quite attractive. It trades at roughly about 1.9 times price to book on FY17. We believe that over the next 12 to 15 months, we could see a target price of 470 here.
Amit, we are waiting to hear your stock specific ideas for our viewers.
Your first recommendation would be going short on Oriental Bank of Commerce. We have already seen PSU banks are struggling to sustain at higher levels. and they are clearly indicating that they are into a long-term bear market. That's why we haven't seen a retracement beyond 23.6% in most of the PSU banks. Within that, there is a good short build-up which is seen in OBC at around 90 to 92 levels. And from a trading perspective, we would recommend going short at these levels. Stop loss for your short trade would be 93, and we are expecting levels below 70. Second recommendation would be going long on Oil India. Now this stock has already fallen nearly 60% in last 1 year, and we believe right now the stock is trading at extremely oversold terrain. Even on the international front, we have seen crude prices giving a breakout from a long-term downtrend, and we are expecting a rally of at least 20% in international crude. Similar is the view for Oil India. The stock has been forming a bullish wedge, and since we have a strong breakout which has happened about 305 levels, this projects a near-term target somewhere around 345 to 350. So from a trading perspective, 295 should be a stop loss for your long positions, and we are expecting a rally of 10% in next week.
Okay, so shorting OVC March futures and going long on Oil India. Avinash, we do believe that you like Capital first. Tell us which is your other stock recommendation.
Yeah, I think the other idea which we would like to recommend as an investment idea is Diwan Housing. We believe that the housing finance space is expected to grow quite rapidly over the next 12 to 15 months, and with the government's focus on housing as well as affordable housing in particular, we believe that Diwan Housing, which operates largely in the 2 and tier 2, tier 3 markets, will definitely benefit significantly. It's the third largest company in India, and more importantly, if you look at the kind of interest margins and the asset quality and the balance sheet size, we believe that a 15 to 20% loan book growth is easily possible over the next 12 to 18 months. We believe that even the valuations at the current level look pretty attractive. It trades at roughly about 0.9 times FY17 book, and clearly despite the fact that the stock has run up post budget, we believe that there's some further upside left for investors who want to take a medium term call. We believe that over the next 12 months we could see a target price of around 210 to 215.
Okay, that's a call coming in on DHFL. And with that, we'd like to thank Avinash as well as Amit for taking the time out and sharing your perspective on the markets, as well as sharing those stock-specific recommendations with us on Buy Now, Sell Now Weekend. And with that, it's a wrap on the show. Thanks very much for watching.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.